biggest misconceptions about borrowing during your retirement years is that it's very difficult, if not outright impossible. The reality is that most retirees actually have better borrowing potential now than others because they've built something up over time, and that is their home equity. But here's why retirement borrowing is just a little bit more difficult. When you're working in this space, lenders rely heavily on your income, and when you're retired, your income goes from being a little bit more fluid to likely fixed. So while they still care about your income, they also want to look at your assets, your overall home equity position, your other investments, and your overall financial strength. Many retirees have substantial wealth tied up in their homes. In fact, if you look at the data, US homeowners are sitting on more equity than they ever have in the history. So here are some of the most common borrowing options of US housing data. First, there's a HELOC, which is very flexible. It's immediate access to the funds when you need it, and it's great for emergency reserves. Once you have it set up, you can literally tap into the cash in moments. Then there are home equity loans. These are fixed payments, fixed amounts, good for known expenses such as a home renovation, an additional investment that you might want to make, paying for long-term care. We also have reverse mortgages. These require no monthly mortgage payment once you've actually taken out the money. You can create additional monthly cash flow or get it all out as one lump sum. And these products are probably the most misunderstood. So you want to make sure, and we've talked about this a lot on previous mortgage reports pieces, that you work with an absolute professional and someone who knows what they're doing when it comes to this product. And then lastly is a cash out refinance, which is very common in today's market. This is very useful when you're restructuring debt, and it can simplify your finances because you can actually consolidate other debts and wrap it all into your home equity. Now, here's the biggest mistake that most retirees make, because many of them will automatically pull money from their cash reserves, their investment accounts, or their retirement reserves. They do this, meanwhile, they're sitting on hundreds of thousands, if not millions of dollars potentially, depending on where in the country you live, in equity that's just sitting there. And I refer to that money as lazy money because it's grown, but it's not really doing anything. So sometimes using that equity strategically will help preserve your other investments, allow them to continue to grow at market rates, and reduce your overall financial stress. That's why the conversation should be much, much bigger than just talking about and discussing rates. So remember, guys, the goal isn't to simply just borrow money. The goal is to use your assets wisely and create financial flexibility throughout your retirement, because the right strategy can make a meaningful difference for the next 20 to 30 years of your life. Thanks for listening, guys. Hope you found this topic useful and informative. Please keep checking back with us here at The Mortgage Reports for more useful content for buyers, sellers, or people that are just very enthusiastic about real estate. And we'll catch you guys on the next topic.